Hello, thank you for joining us. I'm Ross McClary and I'll be taking you through the PSG Wealth Local Solutions Performance Update for January 2020. Starting with the market update. Although the Phase 1 Sino-US trade deal was finally signed during the month, providing some semblance of trade certainty, it was largely offset by the coronavirus outbreak and subsequent fallout as the globe grapples to plot its human and economic cost. This paved the way for risk-off sentiment. In this environment, risk assets and emerging markets struggled globally in January. This can be seen by the significant depreciation of the rand, as well as the negative returns for local equities and property. This was mirrored by their offshore counterparts once the rand depreciation had been stripped out. Over the longer term, we can see that growth assets do provide excess real returns over defensive income-bearing assets for the additional risk taken. Also, as has been the case for a few years, offshore assets have outperformed local in rand terms. This is in part due to a strong US market, some emerging market headwinds, and a beleaguered SA economy. Moving on to the performance of the solutions. Although we have seen some volatility and relative underperformance in the short term, the funds continue to perform well and be ranked in the first and second quartile over the longer term. Looking at some of the highlights of the funds, we can see in the table the top performing individual funds for each solution in the second column, as well as each of the fund of funds' annualized return over the minimum recommended investment period in the last column. Moving on to the quantitative screen. Overall, just 7 of the 28 local underlying funds are currently on the screen. These are, for the Preserver, PSG Stable, Prudential Inflation Plus. For the Moderate Fund, PSG Balanced, Prudential Balanced, and the Net Group Core Diversified. And finally, for the Creator, the Old Mutual Investors Fund and PSG Equity. Regarding these funds on the risk radar screen, the short-term underperformance is attributable to stock-specific detractors, the tough current economic climate, and market factors not conducive to the underlying investment styles. Finally, some of the strong performers for the month include Investec Cautious Managed and Investec Opportunity Fund, which returned 2.7% and 3.3% respectively. Thank you for joining us and goodbye.